So if you do want to dabble in multifamily with FHA, the cool thing is that you actually can, and you can do it for 3.5% down up to 4 units. Pretty sick. There are a couple catches. The biggest one, you need to live in the property. If you're going to be putting 3.5% down, FHA is going to want you to live in that property as your primary residence, at least one of the units. By doing this, it's a great opportunity to do what people call house hacking. So the idea is you live in one of the units and then you rent out either the second, the third, the fourth unit to cash flow and eventually kind of pay for itself. That's the idea with house hacking. For 1 to 2 unit properties, it's pretty simple. You just need your 3.5% down, and then obviously you need to qualify for the property. Make sure you're hitting the debt to income ratio limits. When it comes to 3 to 4 units is when things get a little bit different. Once you get to 3 to 4 units, the property needs to pass a self-sufficiency test. What does this mean? The simplest way I can explain this is that 75% of the rental income needs to cover the entire mortgage. How do we get the rental income? When the appraiser goes out, if it's a 3 to 4 unit, they're also going to have a 1004R. This is going to analyze the properties nearby, get some comps of rentals, and they're going to use that number, again, 75% of what the rent is, and make sure that that covers your entire mortgage payment. If the property doesn't pass that self-sufficiency test, then it's kind of a no-go, right? If it's that 3 to 4 unit, doesn't pass the self-sufficiency test, then you're gonna either need to put more money down, get the interest rate down, or find another property that is going to rent. Again, 75% of the rental income needs to cover the entire mortgage. Very, very important when it comes to 3 to 4 units. Very important. Let's throw a little example in here. Let's say, for example, you're doing a 3 unit, right? Each one's going to be $1,000 a month. Okay. 75% of that is going to be $2,250. That's the number that you can't exceed for your mortgage payment. So think of it like that. If you have an idea of what you want to charge per door, times it by 75, that is what your mortgage payment cannot exceed.